All right, good afternoon, everybody. So once again, we have our weekly trainings, and it's kind of interesting when you think about the training that we have today. When I always talk about things like policy review, this can be probably one of the most important things for agents who are brand new all the way up. So when you think about the idea of a policy review, it's a very non-invasive way to help you with clientele and opportunity. So, when we think about it, everybody has at least had at one point life insurance policy, whether through work, through personal things like that. So, the idea of having a policy review, most people have at least had some type of experience with life insurance, good, bad, or indifferent. Okay. The most important thing is you have to understand that you're never going to know if you don't start talking to people. So let's pull up some reasons for a policy review. So we talk about what we're going to talk about in this session, the different reasons why you would do a policy review. So first and foremost, there are life changes, and we'll talk about some questions and things like that you talk about for life changes as to why you would want to revisit your policies. Pricing, it's a really big deal. So carriers are constantly fighting to win your dollars. It's just like marketing. Everyone is putting money into something to, sell a product or a story or an idea or whatever. Same thing in the insurance industry. So you have regulation changes and stuff like that. So we'll talk about that. And then really how we help. So there's some stuff that I have on the website that I'm also enhancing too that I'll share with you as we continue to grow out this monster. But let's first kind of dive into life changes, okay? And we look at this lovely couple over here. That was me, in my 20s, not even close. So when we talk about life changes, what do we talk about? Clients who just got married or unfortunately, or fortunately, divorced in the last several years. What does that mean to a client's portfolio? What does that mean from an adjustment standpoint? Has their policy or reason for policy increased or decreased? Have they changed jobs or been promoted? You'll find this can be not only life insurance, but also disability. Okay. And I've just run into about 3 or 4 disability cases literally in the last week. So when you think about job changes, people getting promoted, I'm going to throw out an idea right off the bat there. You have doctors, okay? Doctors, when they're in residency, make probably around 80, $90,000. Typically, what happens is you have some type of whole life company, so Guardian, Mass Mutual, Northwestern will provide those students with a disability policy because they are taught that they need it. Okay. So I use the example of Doctor Strange because I love Marvel. But if Doctor Strange had a proper DI policy when he went rolling down the hill in a car accident from texting and driving, he would have had 60% of his take-home income tax-free, and he could have just enjoyed life in the high rise, but he didn't. So these guys start out at residency with a DI policy covering 60% of 80,000, but then they go into their job, say they're a cardiologist making half a mil a year, and they're underinsured for the disability. So if they can't do their job anymore, a living benefit won't cover that. Just so you know, unless it's a heart attack or a stroke, a living benefit won't cover, carpal tunnel, can't perform the job anymore. Anxiety, even anxiety can be a trigger for some DI policies. So to supplement or add on top of that, that's a main reason why when you think of job changes, someone getting promoted, they have the disability side. Or if they don't make it home tonight, is 10 times your income at a $50,000 job the same as 10 times your income at $150,000? Absolutely not. So those are some reasons why when someone has a job promotion, it is important to revisit that situation and have a conversation. Have they started a business or sold one and retired? So that is a huge, huge, huge opportunity given the fact that when you talk to entrepreneurs, when you talk to people who are starting a business, and I can see about 15 of them in this room right now, you have a situation here where if you start a business and you have a dependent who relies on your business, what happens if you don't make it home tonight? Okay. So there are reasons that financial services have life insurance as the foundation for, pretty much everything, a financial plan. The only reason why financial advisors typically don't talk about that is because that's less money going into assets under management and it counteracts. I say that because I used to work with financial advisors, so I'm not knocking them. It's just one of those situations where a lot of times people want to stay in their lane, and their lane is assets under management. So they forget that if you start a business, yes, you need money to get that business rolling, but you also need money in case that person doesn't make it home tonight. Retirement, you might have to reduce the amount of coverage. However, there are other reasons why you could convert some of the term. You probably sold them into a permanent, maybe with living benefits or looking at a long-term care type situation. Have parents become have have become parents? Parents become I don't know what the hell I was trying to write there. Or no, have become parents or grandparents. Yeah, that's all in how you say it, right? So when you have kids, kids are obviously very important. You want to make sure you take care of them. So what we look at as a simple benchmark for each kid is probably about 150,000 for college. So if you pass away, are you setting your kids up for success or failure? Grandparents, let's be honest, they don't care about their kids anymore. They care about their grandkids. So, from that standpoint, is there, yeah, all the grandmothers like, uh-huh, uh-huh. So, from that standpoint, is there a situation where you talk to the grandparents? So, if I were to approach my mom, for example's sake, and say she wasn't my mom, and I would say, like, Karen, I know you love your son Phil, but let's be honest, you really love your grandkids, right? Cameron and Gavin. You know, I bet if there was an opportunity where you could leave them a legacy, would it be something you'd be interested in? Who's going to say no, right? My parents literally left Connecticut and moved to Tennessee to follow me, not because of me, grandkids. So the fact of the matter is when you talk about insurance, when you talk about situations like this, these are life-changing events that cause a trigger for a conversation. Has a death been experienced? Statistics show people are obviously thinking more and more about their own personal finances and their own situation at a funeral. Okay. Or something unexpected happens in the family, and all of a sudden people are like, oh, shoot, did they have this? Did they have that? I'm sure plenty of you guys have conversations around how awful probate is. So if we could have a solution, which we do, on getting set up with wills and trusts to help your clients protect them from probate, this is the perfect time to talk about that. And even refinancing, purchasing a new home or a second home. I don't know if anyone saw the interest rates actually drop below 6% for the first time in a long time. Why do I know that? Because my wife wants a beach house very, very badly. So, from that standpoint, maybe someone refinanced and there's excess capital that they've, now come into. Mr. and Mrs. Client, you now have capital that you can look to leverage or reposition maybe into a tax never bucket for retirement. And so, once again, all of these things trigger opportunity. But what I will say with life changes, you have to figure out when they're having them. So, how do you do that? You have to stay involved, actively engaged in your community, whether you are a churchgoer, there's being active in church, whether you are part of a form or function that is outside of that, charitable related, obviously find something that you're interested in and grow your network from that standpoint. And then friends become clients. I should actually say clients usually become friends. Sometimes friends don't become clients. Matter of fact, I can't even sell my own parents' life insurance, and I've been doing this for almost 2 decades. I think they're a little stubborn though. So let's talk pricing. Okay. So with pricing and the setup here, clients have the opportunity to get more coverage for the same or lower premium than when they initially purchased their current policies due to advances in product design, underwriting changes due to greater medical and hereditary knowledge, and interest rate environments have also changed. So within the last 5 years, what we've seen initially is there was a mortality change. So the CSO tables used to be 2000, then they changed to 2021, I believe. Before that, it was 1980. And so the anticipation were policies had to mature by age 100. Now policies mature at age 121. So what does that do? Stretches out your payments, creates a more cost-efficient product compared to something that was maybe sold in the 90s or early 2000s. On top of that, when you think about it, carriers again are fighting for your dollars. So there are constantly changes in term pricing. You see, one carrier will want to be good in cells of 30 to 50, and they're going to be in the top three all the time. But maybe they have a thin margin of who they want to take. Whereas someone might be in the lower quartile, but takes a lot of other people because that's the way they want their business. Might cost more, but they'll be able to take more business. So, depending on your client's underwriting, maybe at the time, maybe some things have changed. I'll give you a good example. Client got a standard tobacco rating, say 3, 4 years ago. Well, why did they have a tobacco rating? They dipped. And now there are carriers out there today who strategically have underwriting where if you dip and you disclose a positive urinalysis still equals a standard non-tobacco. So through a simple review, we can move a client's policy from one carrier with an older type of underwriting to a more refined underwriting and save them some money or buy them more coverage for the same premium. So there's a lot of advances. Again, medically speaking, people are living longer. Doesn't mean they're living better, but people are living longer. And from that standpoint, you are seeing that longevity where if someone had a heart attack, in their early 50s, uh, good luck. Depending on the heart attack, you might be dead by your early mid 60s. But with advancements in technology, valve replacements, and all that other stuff, hell, we're like cars, you just fix the certain things with bypasses, and all of a sudden they're living to 70s, maybe even 80s. So there are definitely some advancements, and the insurance industry does keep up with all of that because they have the law of large numbers. They have giant books of business, they capture trends, they see who's passing and why and all of that stuff matters when it comes to pricing. So you'll see, and I always say to people too, when you talk about underwriting, underwriting is like an art, not a science. Every carrier is like an artist. Okay, so if I have 40 artists at my fingertips to give you, Mr. and Mrs. Client, 40 different self-portraits, you get to look and pick which one you want to put over your fireplace. That's basically saying between the mirroring of pricing from the carriers and the underwriting offer you would receive, we find the right fit for your budget and ultimately go with that carrier. So there is no right carrier. I mean, everyone on this call looks extremely healthy. And then you got me. So we would say I would go with a different carrier versus most of you guys because I would look for carriers that are more favorable for well-insulated individuals. So how can we help? The big thing with these is to first off identify a client. And I don't do these trainings just because I like hearing myself talk, right? So, identification is the first step. Whether you have a seasoned book of business, the first thing I would recommend with a seasoned book of business is ultimately look every single month and pull a list of all of your clients that have anniversary dates. From that, reach out to them and simply say, hey, just checking in with you. Your policy premium is due this day. It is this. How is everything else going? And see if you can engage in a conversation. So there's always something that you can do to mine your own prospecting or book of business from that standpoint. It's not always do I have to find a new client. Next step is analyze. So when we talk about analyze, there's two ways you can do it. The easy way is just simply get a statement. And sorry for the chicken scratch, but you get a statement of the policy, the current statement, client's date of birth, the basics, and then you can start to look if you can potentially improve. Now, if you want to take it to the next level, you can, for permanent insurance, get an in-force illustration. Now, why would that be important? So, say for example's sake, I had a statement from a client and the premium for their current policy is $200 a year. And I run a new one and it's $2,000 a year. Well, man, this old policy is much better than the one I just proposed. But what they don't see is the policy is going to lapse next year, right? So there are certain things that an in-force takes a current projection of what's happened in the past and magically what will happen in the future based on what has already changed. So cost of insurance, cash value, all that stuff will differ. So an in-force illustration will show a future projection and also can help you close the sale of your current policy as well. And then ultimately after that really is how do you manage that? Well, as I mentioned here, I gave you a gem already. Pull your book of business up every first of the month. You look at all your clients that you got, see what anniversaries there are. So there's little tips and tricks up here that can definitely help you out when needed. So let's take a look at an example here of how you would want to kind of approach some type of policy review. Okay, so this is a real life example of a female. She was married and has two kids and currently has two policies. Now, right off the bat, New York Life, typically a whole life policy. They do sell VULs as well. But it was from 2001. So already, based on our previous conversation here, or me just saying it, is the mortality tables have changed since 2001. Client currently has $111,000 in this policy as a death benefit, with about $21,459 in cash value. Currently paying $876 a year. So the dividends right there, $298. That tells me something right off the bat. So it's not so a lot of times you'll have in whole life an agent when they're initially selling it from some of these captive agencies, they want to say, hey, in 10 years, the dividend will cover all of it and you can stop paying. Well, that's awesome to hear. But if you'll notice here, $300 is not $880. So there's a gap there of roughly $580. And it's going to take probably another 10 to 20 years to get this to equal this. So what happens is if someone stops paying a premium, you see how this policy originally started at 100,000, now at 111. So it's gone up like this. Now what's going to happen is if they stop paying the premium, or excuse me, stop paying the premium and let the dividend cover it, their policy is going to start going down. So the question is that the right fit for them? Do they understand that when they first started looking at these policies and things like that? So the next thing that we looked at was, okay, so they have a policy, whole life, you pay it, it's yours, whatever. They also have $1 million policy from John Hancock. Now, John Hancock sells three different types of policies. They sell VULs, they sell IULs, and they sell current assumption universal life policies. So what you'll notice here is they're paying significantly much more than they were paying on the whole life, but they also have a significant amount of cash value available, and it's a level policy. It's stated at $1 million. So, in this scenario, we also look at what the clients paid into it. So, years in force, 23 years, they still have not captured back what they put into the policy. So, when you look at this statement, I mean, in this scenario, we are looking for $1 million death benefit. It's not like a LERP sale where you're trying to get income. So, I'm okay with that. However, do we have opportunities? There are opportunities when you look at this where can you potentially take the premiums, take the cash values, and solve for DB? Can we give you more death benefit? Or can we take the death benefit? So we have the DB, and now we're solving for a lower premium with the 1035 involved? Or does the client maybe want to do a single pay and see how much this cash value alone can buy them in a new type of product and put roughly $7,000 back in their pocket per month? So those are typically what you look for when you're doing a policy review. So if we ran the numbers, so once again, looking here where we do the same premium plus the 1035 exchange, so 7226 plus the 1035 exchange, we were able to triple their death benefit with a 6% rate of return. Mr. and Mrs. Client, what do you think about that? I mean, that's an unreal opportunity right there, especially from the standpoint of you're not changing anything other than giving a better value. By the way, this carrier gives you up to 50% of this death benefit, or actually capped at 500K, in long-term care in the product itself. So now I'm giving you a form of long-term care as well. And for ladies, it's more important than men because we like to die quicker. But ladies, you're the ones usually left behind. So long-term care is way more important for ladies. That's why finally, long-term care costs more for women than it does for men. Finally, some insurance where women cost more. So I'm not judging, I'm just saying. So what you see here is you have a much higher death benefit, and we haven't changed any of their current position. Let's flip the script and let's look at a single pay. So only 1035X. 148, 459 buys you about $680,000 more a month than you would have had with your prior policy. And now we're putting 7,226 back in your pocket every single year. The only reason why I haven't showed you a same death benefit with less premium is you don't need it. So in this scenario, the client wins. And so I believe, if I recall, this is the one they went with. But once again, it's all in the conversation and how you position it. Because if you looked at the policies that they have, you could say, well, this one you won't stop paying for another 20 years with the whole life, and it'll give you X, Y, and Z. Here, you aren't paying at all. With the John Hancock, you have to keep paying, so on and so forth. And the question is always, do you want your death benefit now or do you want your death benefit later? Going back to objectives, it just depends on what the client is looking for. So, what I've done on the website that I'll share with you today is, I've been working on a few things. So if we go back to valorfinancialspecialist.com, okay, my lovely website, this is, Nashville, and that is where we're doing the summit this weekend at the UBS Tower. So if I look at this and I go to the Solutions tab in Life Division and scroll down, I'm going to find better placement for this, but you'll see here the quote request. Click on quote request, and you'll see all different scenarios and different opportunities that you can send to me if you want help. I used to do 60 policy reviews a month when I worked with financial advisors because they had no idea what they were looking at. So if I click on Enforce Policy Review, agent name, agent email, what carrier does the client currently have? Policy type, policy number if you have it, issue date if you have it, insured's age because that's easier for these, current death benefit, cash surrender value, cash value, any loans, current premium, and how are they paying? Any special riders that they may have, you'd have to identify it on the sheet. And then you have any health changes because that's important. You know, someone had a stroke recently, they probably want to keep their policy. Any updates to their financial goals? They want to save more money for retirement, less in insurance, stuff like that. Changes in insurance needs. Concerns with this policy. Reason for review request. You know, it's very simple. You can even say what type are you looking for? They want to maintain that same coverage, increase the coverage, or reduce it. So I know what that means. So increase coverage, same premium, 1035, see if we could do better, so on and so forth. So we'll look at options. So any budget constraints, any new features they want, like long-term care, timeline, are you meeting with the client in 5 minutes? That would be a problem. And here you can even upload the statement or in-force illustration to allow me the opportunity to help you, I guess you'd say put the pig through the python. So from that, what I would say is that give me one sec here. Thought I saved a screenshot of the policy to look at, but I can't find it. So anyway, so yeah, so when we go back to this, these are things that I'm looking to do to help you out. Again, you can do it with term. So it'll have all of it here. And what you'll see in the future, I don't know if this is true yet, but it's quotes.valorfs.com. Yes. So it's already set up. Okay. Quotes.valorfs.com. I'll just put that in the chat here. So if you want a review, same thing. It's just finally put in here income focused. So do you want a LERP? What are the objectives? Once again, trying to make it easier for you guys to streamline the process, easier for me to help you is the best way I should put it. Streamline the process and help you get in front of more clients faster. So this is available for you. Again, the objective is to help simplify everything for you guys. And if you have any recommendations or other things that you want to see, we can always look at adding more. So it's not a big deal. All right. So next thing is most important, time for action, right? When you think about this, again, what we're doing today is it's football season. We're all in a huddle right now. We're all friends here. We're all in the industry. But this means nothing unless you actually execute the play. So what you want to look for, who do you know who has life insurance policies in force with a purchase date of 5 years or greater? Let's say face amounts of 250K or more, annual premiums of 5,000 or more, cash surrender value of 20,000 or more. I'll pause right there because some people will say, well, Phil, why wouldn't you help someone who has $500 in cash value? Because it's going to take a lot of work for not a lot of pay. Okay. I am also a person who wants to evaluate my time. Is the gross worth the grief? Because if you have $500 in cash value, it's much easier to just surrender that and do a brand new policy. I'm not doing a 1035 exchange for $500. The carriers take forever. So when you want to talk about a streamlined approach and an opportunity, these are the places you want to start with. But again, if you're brand new to this, beggars can't be choosers. Take what you can get. It's a conversation. So if you have an insured between the age of 40 to 80, no major changes in health since time of issue, but they still have a policy, maybe things have changed. VULs, ULs, or whole life policies that are underperforming or inefficient. IULs as well. I don't know why I didn't put that in here. So all of them are on the table. The idea is when you talk to a client, one of my favorite things to ask them right off the bat is, why'd you buy this policy? And wait. Most of the time, people don't know why they bought the policy. It's because someone came in and told them to buy the policy. But that person is either out of the business or they're so busy with other clients that they forget about them and they are on a lonely island. So, has the client's focus changed? Is it focus on death benefit rather than cash value? So, a lot of the agents in our industry now focus on LIRP sales, life insurance retirement plans. And the thing is that a lot of times people in that market also have money to invest in other assets, and maybe they met their retirement goal, but now things have changed. You got a big bucket of cash, and now you can reposition it to a death benefit focused product and give them a lot more death benefit than they had before. So, all of these things considered are great ways to kind of jog the memory, to kind of understand, different ways that you can approach your clients. So, the important thing with all of this is as you talk about these, I hope you've written down a few clients. If you'd like to discuss it with me, there is appointments.valorfs.com where you can set up a 30-minute Zoom, a 60-minute Zoom, 30-minute call or 60-minute call. And we can go through the opportunities. We can run illustrations if you want. So if you're not proficient with them and you want to learn, I can take you through that step by step. Again, the only caveat is I'll be gone from the 24th to October 12th, but please, please, please utilize the resources that you have. I'm here to serve you any way that I can. And a policy review is a great way to start your journey. If you're brand new to the industry, policy review and term insurance, there are a lot of people who make a lot of money just by talking about those two things. So, with that being said, I will basically say that's kind of it for the presentation. Does anybody have any questions, comments, anything that I can answer today?
Yes, Phil, thank you so much, man. This is awesome. On the long-term care for the life insurance part, or for the, I'm sorry, for yeah, for the life
In
insurance.
general, yeah.
Yeah. Is there a waiting period?
So typically it depends on the carrier. There are waiting periods. If you talk about traditional LTC, 90, 180, hell, you can even do 365 if you wanted to, but when it comes to the carriers, a lot of times they do have a waiting period around 90 days. And a lot of people don't realize why they have that, because Medicare, not Medicaid, Medicare has 120 days where they give you free skilled nursing care. So if someone is going on claim, you can use your Medicare solution and have that, or it's 100 days, 100 days. And you can utilize that while you're waiting for the 90-day period to end on these type of plans. So yes, they do have waiting periods. They're usually 90 days. If you're talking about the hybrid products between life and long-term care or chronic illness. So yes.
Got it. Got it. So that's for from initiation from like when they initiate the long-term care rider. But is there a waiting period, let's say, to access the benefit? Like, let's say a 1 or 2 year waiting period to even
No,
have access to it? Okay, awesome.
no. Yeah, as long as you qualify. So, and that will, so I'll throw out the contestability periods and things like that. So keep that in mind. So if someone has a ailment that they didn't disclose, well, you have 2 years. So if someone doesn't disclose it and then all of a sudden they try and access a claim, then the carrier will just refund them their premiums and act like it never happened.
That makes sense.
Yeah. But good question. Dina.
This is very newbie. I am not contracted with all of my carriers yet, but I was wondering, I do have someone that I would hopefully love for you to be able to make an appointment with prior to you leaving.
Sure.
He's just gonna start his own business and leaves his current job in a couple weeks, but can I still make the appointment with you with him even though I don't have the contracts with all my carriers? Okay.
Yeah, yeah. The cool thing is that, you know, with who we're associated with, affiliated with, you can set up, as long as it's not Pennsylvania, you can set up the appointment, request the contracting, and submit the paperwork the same day through the iGo platform. So I usually say when we start, get a few carriers just so you have some under your belt. But as you progress through the process, you know, and you need to add more, we'll add more. So it's not a big deal.
I'm gonna work on trying to get an appointment before you leave.
Love it. Love it. See? Love the action. Love the action there. So, any other questions?
If I have a question,
Yeah, what's up?
for any enforced policies, so how often we can raise a request for a rating change? For example, for juvenile cases, we get a standard from AAG, and if the child turns 18 plus, can we request that? That's one. And for some people who got, let's say, diabetes, they got table C or D or something, and over a period of time they get better, can we request a better come back to standard or something like that?
Yeah, so it would be on the anniversary, so you can do that. And so say for example's sake, this year, you know, I struck out and my rating wasn't better. Well, I can come back next anniversary if my A1C is down, and you know, there's limitations. So, and that's an interesting question. So Corebridge, the best you'll get with kids is standard, non-tobacco. They won't go to preferred or preferred best, just so you know.
Yeah.
They do have a separate track, if you will, for juvies versus the traditional 18-year-old. So from a cost perspective, it's still fine compared to an 18-year-old getting preferred plus with someone else. But National Life Group, very big with juvies, very good with juvies as well. They one will go up to $1 million on a juvenile as long as the parent has double the coverage, and two, they'll go up to preferred plus as when the kid turns 18. So you know, some differences there. But yeah, that's one thing to just kind of understand. On the flip side, again, when you talk about someone who had poor health and they want to improve it, you know, some carriers the max will go as preferred. So if you had a standard, then they go preferred. But if it's diabetic, you know, then the best you'll typically get with carriers is standard.
Okay, thank you.
No problem. Gloria, you had a question? I saw you come off mute. No, you just wanted to come off mute for a second. Okay. Well, as I always say, great questions, by the way, guys. You will see all of this uploaded to the YouTube channel. If you are not already a subscriber, you can subscribe. This is the cheap, shameless plug. Videos are all here, and we'll continue to post them here until again, for those who came in late, I am building a learning management system. So there will be all of these will go behind the iron curtain, if you will, and then we'll probably put up some digital shorts, you know, trying to get people into the Valor system. So all this will be posted there. Kavi, you had a question?
No, Phil.
Oh,
I yeah, I just want to say thank you.
Oh, no problem. I heard the drop. I was like, I hope it's a book and you didn't fall. So,
No, I'm good. Thank you.
awesome.
How
Well,
have you been?
fabulous, fabulous. So, Dina, you have one more question, or?
Nope, I was gonna follow Copy's lead and just say thank you also.
All right. Well, I appreciate everybody for coming. Thank you so much. This will be posted. You guys have a great rest of your weekend, and whoever football team you're rooting for, I hope they win, unless they're
Thank
playing
you,
the
Phil.
Ravens. See you guys.
Okay.
Thank
Bye-bye.
you. Bye-bye.
Bye.